Let us build up a chart, set and forget, and see if we can make some profit.
Wait. Matron, take them away.
And a warm welcome to one and all. If this is your first time here, coffee obsessed, scruffy trader. What I'm trying to do is put trading in the real world and maybe show you a trick or two along the way. And the only way I know how to show it is to put it in the moment. I don't like roll back charts or anything like that. So when I switch it on, it's now. And I think that's the fairest way. So what I'm going to do today is I'm going to build up a chart on euro dollar and hopefully get a trade. Now I've already given a highlight to the guys in the Discord what I'm doing, and I shall show you. So let me flick this over. What we'll kind of see here is my bias. Now if I just flick that away, I put this in here every day for them. We have a merry old chat amongst what's going on, etc. And it's a good community. It's a lovely community to be part of. And we actually try to have a scruffy meet in December. We've had plenty. And this one, it's Christmas, so we're going to get real boozed up. Whee! Well, I will, because I'm an overgrown child. But what are we looking at here? What does this tell us? Well, this tells me the state of play of the market for each hour segment that I'm looking at. Now, in this hour segment, 9 through 10, it's telling me that the only real product to look at is euro dollar. And it's also telling me to sell it. And it's also saying it's a good trade. Okay, so it's pulled out a lot of elements. So what is that like on the strength meter? Well, it's middle ground. So the euro's here at 42, but it is stronger than the US. Okay. So if it's stronger than the US, why is it selling? Well, this is another element that you've got to kind of pay attention to. Because just because something's strong doesn't mean to say it's going to continue to increase. What I can be telling you is it's overpriced, so therefore it has to come down. But if we look at the change of strength, the US is actually greater than the euro. So it's telling you there's a change of power, there's a change of sentiment. So that might show that it's the strongest, but it's showing that it's actually weakening, which will help tip it to the sell side. Okay. And then the rest of this is it's made up. These are the majors. Of the majors today, it's USJPY, but it's Thanksgiving, it's going to be relatively quiet, so there's no point really looking at it. And then up here is the true basket of what is good, bad to look at. Now, this particular basket here, I will look at regardless, because these are the biggest movers of the day. All right, they will always move every day. So that's what that's all about. So how does this translate into the chart? Well, if I'm looking to build this up, and I look right out into the marketplace, you can see the strength. It's pushed up, it gapped down on Sunday, it's tried to rally, and it's come back to the top section, and now that sell is coming in. You can see it here. Where's the 4 hour looking? Well, this makes it a little bit cleaner. There's the drive that it's trying to peak out to here. It's pushed down, it's had continuing selling, and now we've got a big body of selling here. Okay. So there's going to be a real tussle. So let's build this up on an hourly chart so we can see it. Well, if we go from the start of this move, so just crunch that up a little bit, we can see that is quite a sustained move. And now it's collapsing. This can be a little bit of a brief pullback and then down. Okay. So let's put a little fib on. So we can kind of see it started, probably there's the accelerant. and it's got up to there, and it's coming down to the 23. Now, I like to see a close over this, but I'm having to pop out this morning. So what I'm going to do is I'm going to let the trading gods decide for me. So let's drop in a couple of levels. So we've got a good level here. We have a good level there. And we're going to work it to roughly around this point here. All right. Okay. So now I've got some structure within structure. Okay. That's telling me some good key points. Now, I can also see this drive here pulling back. So I want some good entry points. So I'm going to put a fib on this. From there to there. There's the 50, there's the 38, there's the 23. These can be trigger points into target points. So that's what I'm going to work on. I'm going to work on these levels. So I'm going to put orders on the retracement levels of these to go short. So let me show you how I do that. Now, I would normally rack and stack this, but I don't particularly want to today. So there. Oops. There. And that one's going to run in to target that position there. Okay. So we're going to place that order. Happy with that. One above it. Now this order is going to be on that level. Coming, let's see if we target there. Okay, so that's that. And then we're going to also put one on the 50 as well. So this is quite an aggressive madness point of view. Okay. There we go. Right. So I put 3 orders on there. But what I'm also going to do is I'm going to put orders 1, 2, 3, 4, 5, 6. But I'm going to build them up with small positions. All right, because I don't want to overstress the account. But I want some trailers running. So I'm going to put a pound here, a pound there, up. And once it gets through this, that's it. But the idea is this might spike and it might go boom, 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 pick a few extra up and then pull them back. But those orders are going to come out on this level here. Why? Because they are just to protect the account, help pay these off, but also give me something in the meantime. Okay. So let me do that. Okay. To there. Now, if that one triggers before this one, I'll delete that order because I don't need it anymore. Okay. That'll do for now. So what I've done is I've set the chart up in such a way that it has defined entry exit points. It has entry criteria based off of fib, which is this. Pull this down, which is this. So it's giving me structure into what I need. And then it'll just give me entry points. So if it came down, pick that up first, brilliant. And then if it goes back and picks these up, amazing. However, if this 38 triggers first, I don't need to add into the trade. I'll just take that away. All right. And what I'll have a tendency to do is take that away, but put it higher up. Okay. Because I like to build backwards rather than forwards. Anyway, it's set up, it's ready. If we sort of get up into here somewhere, then we got a problem. have to rethink it. And, well, you just sort of take your medicine, don't you? But in the meantime, I'll drop this down into a 5-minute chart so you can watch it dance. As you can see, it's all scaled out. Right, there's one in. So we don't need that one anymore. We'll get rid of that one. Okay, happy days. So what I'm going to do is I'm going to put this, I'm going to add another position here of 4 to make that a 5. Okay. So letting my trades work for me. Okay, so give me a second. There, just move it into place to there, just like so. And then we'll just drop a target in there. Okay. Right. It's all set up. I can monitor it on the phone while I'm out. Jobs are good. Happy days. All right, guys. I'll catch you at the end. Okay, guys, trade's done. And what have we done? Well, we've done quite well. There we go. So 438 over the last couple of days. Now, the FTSE trade I started yesterday. I did that for Michael. I was having a good chat with you. So a little salute to you, my friend. And I was kind of explaining that you have to wait for the conditions to be right in order to enter. And the patience will pay off. Now, I sat in that through the night. And yes, I've had to kill a little bit out of it. But so what? I started with 0. I ended with 1. Don't matter what happened in the middle. The premise was I waited for the criteria to be right and then go with it. And it's similar to what I've just done with the euro dollar that you see here. Now, this particular trade was done for Peter. Salute for you, Peter. And the idea behind it was let the chart do its job. Don't tinker with it too much. And it worked very well because I had an appointment this morning that I had to go to. And the idea was to look at the big picture, be patient to let the market settle, because I did my analysis. Maybe he's an hour and a half or so before I actually entered the market, because I always look at it. I don't trade open, so I want to see what happens with the open and then make a decision. Well, I knew what the deep trend was, the big picture. And I also had a fair idea what the day trend was, the here and now, what's going on now. And then I needed some criteria in order to stage into the trade safely. And that was that Fibonacci retracement. Now, I wasn't going to trade into the retracement. I wanted to trade out of it. So I used the level points as areas of attraction to enter the market and then get the continuation to the downside that I was looking for. Target it appropriately and then just let it get on with it. Now, it did show a signal on that drop, which was the flush out, that there may be a reversal on the card. So I took a bulk of the money off at that point, left a couple of runners to see what would happen. If I flick it back, I'll just kind of show you that. That was a flush out candle. In other words, it was a solid push down out of the blue, basically just catching anything out, and then it exhausted. And then there's the retracement. Now, I didn't want to be caught in that and give all the money back. So I took a good chunk off and then just see if it was going to run down into the next level. That was the idea behind it. But that's chart monitoring and chart management. The initial part of this was chart setup. And the chart setup was look at the big picture as I showed you at the start. This is what's happening. This is what I expect to happen. Put in some markers with the blue lines, etc., where I think the market can potentially get to. And then I needed reasons to get in. I already knew what the direction was. And that's why I put the other fib on to give me clean entry points to get in. Simple stuff. So if you want to see exactly how that was pieced together, with all the nuts and bolts, the sort of investment that I put into it, I don't believe in risking on a trade. You should never risk anything on a trade. You should invest in a trade. You're putting money on the table to get money off the table. You're not risking. If you're risking something, you're gambling. Always have it pre-planned. And that's the secret of trading, guys. And I hope with these videos that comes across. And if you think I'm wrong, tell me I'm wrong. Drop it in the comments. You know, there's nothing wrong with disagreeing. If you're a Popeye and you're just having a pop, you can fuck off. But anybody else, I'll talk to you. I'll talk to everybody. Anybody who emails me, I answer them personally because I think I should. You know, and there's nobody says that I don't. Can't always give you the right answer, but I will talk to you. Genuinely will. I email loads of sort of YouTube traders, or I should say, I have done in the past. I don't anymore. And none of them reply. But if I say I want to buy that course, then they'll reply. Well, bit odd that one. Let you do the math. You know, simple stuff. Anyway, almost got a rant there. Nearly had a scruffy rant, a little scruffy rant, just a little one, just little like you.
What do you mean?
I do like a little rant. She's been ranting all bloody week, constantly. Me. So with that, my ears are battered. Got my coffee because we all know Scruffy likes it coffee. And even though she bangs on, he does like Winky as well. He loves his job. So as always, guys, do well. Keep your risk managed. Above all, do what you love. And the money will follow. See you all in the next one.